Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Scarlet Fu, counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, as well as for those folks streaming on YouTube. A market down here on the day. You add that to the losses, Carol, that we saw on Friday here. And you have a market that's pulling back. An interesting note making the rounds right now. JP Morgan strategist Marko Kolanovic saying, well, investors should fade last week's rally, and apparently they're doing just that.
Well, and what's interesting is we've got both bonds and stocks down in terms of the prices, but if you take a look at that two-year yield, it's just moving up here in the last few minutes of trading here. So we're seeing kind of a bearish tone when it comes to rates, and I've got to wonder, you had that Steve Matthews story talking about Romaine Bostick saying that we could see a higher peak rate ultimately because of that strong January jobs report. Investors are definitely getting a little bit more bearish about the rate environment.
Yeah, well, speaking of bearish, we just had a really interesting conversation with Amanda Agati. She's Chief Investment Officer over at PNC Asset Management Group. Here's what she said. We've been describing the market as delusional, deranged, and unhinged.
Wow.
At the end of the day, what we're seeing with leadership does not align with our outlook. She says, base case, a 10 to 15% downside from here on the S&P 500.
Because we're overvalued, she said, on the market.
10 to 15%. So that puts us down, what, like 36,
All the notes coming in right now
Back to where we were in October, December.
All the notes right now strike a very similar tone. This idea that stocks, after the big run-up, have pretty much priced in everything they could on the good side, on to the upside, and now it's time to face reality.
Maybe that's what we're getting right now. We talk about an S&P 500 that on Thursday, at least on an intraday basis, came within a whisper of about, what is it, like 4,200 here, peeling back by about 1% on Friday. And here on this Monday afternoon, it's going to close lower by about 0.6%, down roughly 25 points as we wait for the numbers to settle. Dow Jones Industrial Average lower by about 0.1%. The NASDAQ Composite moving down by about 1%. And the Russell 2000, that's your relative laggard here, down on the day, Carol, by 1.4%.
Yeah, a little bit deeper into the S&P 500. So see what we saw, and most names, Scarlet, about 348 in that index, closing lower for this Monday trade, 155 higher. So definitely more of a risk-off trade here.
Absolutely. And if you go into the 24 industry groups in the S&P 500, look at the bottom, and those are your growth kinds of stocks, media and entertainment, telecommunication services, which includes a lot of those tech names, semiconductors. That is dropping for the day, and it's an extension of the losses that we saw on Friday. On the upside, you do have Tesla lifting the auto group overall, and utilities has been a consistent outperformer all day long, up 0.9%, even as they got sold off on Friday after the big jobs report.
Yeah, absolutely, and that's one of my gainers in today's session, and I just want to go through them quickly. It feels like you had to be either an M&A target potentially, or you had to have AI connected with your name to gain in this session. So Catalent, this was top in the S&P 500, up about 20% by the end of today's trading session, jumping following a Bloomberg report that life sciences company Danaher is said to be interested in the business, valuing the target at a significant premium, although we don't have the deals. Keep in mind, it's unclear how much this will move forward or whether Catalent is receptive to the offer, according to those in the know. So just something to keep in mind, but definitely a standout in terms of performance. Scarlett, you mentioned Tesla. It finished up about 2.5%. It's up for a fifth straight session. Again, it's really been on a move to the upside. The company raising the prices of its Model Y SUV in the U.S. That happened on late Friday. Also late Friday, I was here in the office still when that verdict came in. Elon Musk cleared by a federal jury on a suit about defrauding investors. That stock now up about 60% in 2023. And one last one, I mentioned AI. It was a good thing to have anything related with AI today, because you did see SoundHound AI. That stock was up about 43% in today's session.
And just real quick, I'll add one to that. The Bed Bath & Beyond finishing out the day, guys, up 92%. This is for a stock that is probably just so volatile. Believe it or not, this was still the biggest one-day gain we've seen on there. Volume up by more than 700%.
Okay, so
at one point.
No news, by the way.
So that's what I was going to ask you, Romaine. I mean,
so is that the derangement? Is that the delusional?
That's exactly what I referred to when Amanda Agati was talking about.
I heard you had cupcakes on Friday.
We did, yeah.
Did you leave some for me?
Pink and blue.
I don't know
They'd
if they're
be
any
stale
left.
by now, but we didn't know whether it would be pink or blue.
Trust
me. That counts, Scarlett.
They're still good. Okay. Trust me. Ask me how I know.
All right.
I've
Do we
still
have
been eating
losers
them.
today?
We do have some decliners. Big tech taking a hit today. I don't know if I want to call them big tech. I'm just going to call them mega caps. Okay, mega caps taking a hit. Apple finishing it down by 1.8%, despite the miserable earnings. That's Mark Gurman's description. Late Thursday, Romaine. Apple shares actually closed higher by more than 2% on Friday, giving back some of those, down 1.8%. Alphabet finishing it down by 1.8%, and then VF Corp tomorrow we get earnings down 6.4% today.
All right, let's get to Skyworks. They are crossing. This is a big Apple supplier. Most of their revenue comes from Apple specifically. Here's one of the headlines. The company announcing a $2 billion share buyback. That often gets the stock moving. That is a new stock repurchase program. So we're continuing to look for some headlines with earnings. But keep in mind, this is a semiconductor company for mobile communication. It's up about 21% so far here in 2023, just up about 0.2 in the aftermarket. But we're just waiting, Tim, for some of those earnings numbers to come out.
Yeah, I'm still looking for Pinterest shares as well, given what we saw last week with Meta Platforms, a year of efficiency. I'm going to be looking for that company and commentary about how it continues to compete with increasingly, Romaine, not just the big social media players, but Amazon as well.
It'd be interesting to see, and of course you're going to get some video game companies too, Activision, Blizzard, and as well as Take-Two. Let's get a quick check here on the yields because before we get to more earnings here, because this was a massive day. We're up 19 basis points right now on your 2-year yield here. You add that, of course, to what we saw
going up, by the way.
Friday. We're talking about something like a 40 basis points almost right now on the 2-year yield. If that's not a repricing of Fed expectations, I don't know what is. A lot of activity in the belly of the curve. Your 5-year yield up 17 basis points. Your 10-year up about 11 here. The fact that you're seeing that so lopsided to the front end and, of course, into the belly, that is a Fed repricing of now a market that just seems to now believe that maybe this isn't it. 475 isn't it. 5.1 isn't it. The question is, how high do we go, guys? And more importantly, how long does the Fed keep it there?
Well, I want to go back to earnings because Skyworks coming out with their numbers. This stock is shooting up in the aftermarket, up about 3.7% as we speak. First quarter revenue, $1.33 billion, slightly better than what Wall Street was forecasting of $1.32. First quarter adjusted operating income, $491.3 million. That too was a beat compared with $487.9 billion. So there was expectations that this would maybe be disappointing, but right now investors sending it higher, Romaine.
Activision Blizzard shares crossing the wire right now as well. The headline number coming in with 4Q net bookings at $3.57 billion. The street was looking for $3 billion, so that's a beat on that main metric here. Going forward, and we should point out adjusted EPS at $1.87 versus a street estimate of $1.52. But here is your forecast. The company sees 2023 net bookings up at least in the high single digits year over year, and sees 1Q net bookings growth at least in the mid-teens here. We have to sort of look at how that compares with some of the estimates here. Not a whole lot of activity in the shares right now. Remember, of course, this is an acquisition play as we wait to see whether Microsoft is able to follow through on that $69 billion purchase of this company.
All right, let's also take a look at Take-Two Interactive, which, judging by the numbers it just reported, is likely falling in the after-hours trading. And there we have it. Third quarter numbers, missing analyst estimates, whether it's net bookings, whether it's adjusted EBITDA, whether it is adjusted earnings overall. And the outlook also disappointing, too. For instance, fourth quarter adjusted EPS of 60 to 70 cents. Analysts were looking for $1.03. Wow. Take-Two also sees full-year net bookings of anywhere from $5.2 to $5.25 billion, whereas it had previously expected up to $5.5 billion. So the takeaway here from Take-Two Interactive is that things are going to be a lot slower. And in fact, the company is in cost-cutting mode, saying that it sees $50 million in annualized savings from its cost-cutting program.
Yeah, I want to go to Pinterest because shares are just falling in the after hours right now, down 11.5%. The company reported revenue for the fourth quarter that missed the average analyst estimates. Revenue kind of coming in line, 877.2 versus an estimate of 887.2. You're seeing EPS remain of 3 cents right now. Average revenue per user, though, coming in below estimates at $1.96. Estimates were for $1.98.
It's interesting, too. I mean, when we talk about the idea here of what's the growth story, both in terms of users as well as ad growth here, we already got a peek out of that with Snap and, of course, with the big companies like Meta and Google here. I'm not sure what the growth story is here. And we should point out they also announced a stock buyback, only $500 million and not having much of an impact.
Does ChatGPT make Pinterest less relevant?
I don't know.
Or maybe not ChatGPT, but generative AI, because you're using simple prompts to create art, to create text. I mean, Pinterest is all about
We should point out the CFO of the
taking
company
snapshots of those
also
pictures.
departing the company. Todd Morgenfeld, the CFO of Pinterest, leaving the company. That's the other headline coming out of this company right now. So a lot going on. One of the biggest decliners right here in after-hours trading, Pinterest down 15%. That's not the biggest decliner, though, in after-hours trading. That belongs to Chegg, down about 17%. This is the online education company, and this appears to have to do with a big revenue miss, particularly with regards to the forward guidance. 2023 revenue guidance coming in at 745 to 760 million. The street was looking for 820. So a pretty big differential there between what the street was looking for and what the company is guiding to.
Not much commentary that I find in the press release from Dan Rosenswag over at Chegg. He does say the last several years have been very challenging for everyone. He says we're excited about the next chapter for Chegg, though I should note the company has been under significant pressure.
And some of that because of ChatGPT
exactly.
and AI.
Yeah, AI, the concerns there.
RAM
It's everything.
is also out, and that's
Is this all we're going to be talking about this year? So last year was all J.
It's the year of AI.
Today is AI.
Romaine.ai.
Yeah. Has Elon Musk announced his AI initiative yet?
Wait for it. Just wait for it.
Did you not see the white robot thing, the human robot?
Yeah, that was interesting when you put the guy inside the suit.
His car is his
A lot
AI.
of stocks moving in the after hours. We will continue.
I
to
love
talk
that
about
guy,
them,
by the way.
The robot?
I think we have to go.
We got to go. All right, that's
see
a
ya.
wrap. Our cross-platform
Good job
coverage,
today,
radio,
Tim. I
TV,
hope to see you
YouTube, and
tomorrow.
Bloomberg Quick Take. I hear nothing. We will see you again, same time, same place tomorrow.